Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. Here's a scalping strategy for your consideration. We used two charts, 3-minute above, 30-minute below. We enable on the trend channel indicator here, we're going to enable cloud break 1 and cloud break 2. We want both of these. On the 3-minute chart, we're going to enable the same cloud break 1 and cloud break 2 in the trend channel indicator. So make sure these are selected. What we're looking for is, and I mean this is a perfect example here. We'll just go back. All right. Our point of interest is the breakout of the cloud on the 30-minute chart. This fires, and that's actually cloud break 1. This is cloud break 2, and this is cloud break 1. It's slightly different. Don't be concerned, either one doesn't matter as long as it's a break out of the cloud. This is a break into the cloud, so we don't touch it. This is a break out of the cloud, so our point of interest is going to be from this point onwards on the 30-minute chart. All right, so you can set the alert to go off in the alerts log over here. Let's come in, click the three dots, add alert, and you're going to want cloud break 1 and cloud break 2. Set both. Once per bar, if you want this to be continuing. Once only will cancel out after it fires. Once per bar will keep it running anytime the alert fires on a bar. So that's permanent. And then you want to find good trending pairs and create. So here's the strategy. Scalping / day trading. Point of interest is this breakout of the cloud on the 30-minute. We mark it up. Then over here, make sure that is selected so that your markup gets transferred onto both charts. After this point here, you're looking for red signals, only red signals on the 3-minute chart. And what we're looking for is this range breaks, comes back to retest. That's your entry point. So we take the trade. And we trade it on the 3-minute chart. Stop loss of just above the cloud. This bit is really important, this next bit. In fact, what we'll do is we'll set up another one, and position size is key for success with this. We're under the cloud, we're above the cloud, but we get a break and we're under the cloud here. This one's a little bit tricky, how to enter. Well, really what we're looking for is look back, and what you're looking for is where it fails, retesting the range from where it broke to the downside. Entry, however you read it, let's just call that our entry here. So we go short. Let's say that's it there. So this is going to be really important, this next bit. Above the cloud, target 2 is dynamic, but here's the thing. We'll open up this 3-minute here. I did a video on risk management. Highly recommend, if you haven't watched it, that you go and watch that video, because the position size is key to the success of this strategy. So there's two trades running. You don't have to be concerned about lot size, okay? It's position size, and it's a percentage of your account. Watch that video on risk management and you'll understand what I'm talking about. So with that concept in mind, the risk here remains the same. Let's call it $100 in dollar value, whatever percentage of your account that is, okay? And let's say, for the sake of the video, you open two positions. One is 0.3 and the other one 0.15, for example. You're going to do the same thing. This is percent, not lot size. 0.3%, 0.15%. See this range here? And it doesn't matter whatever instrument you're trading or currency pair, the stop loss range, it doesn't matter. This remains the same. This will always be, this will be consistent. So the risk here is the same, $100, and you're going in with the same position size across the board. You take 2/3 of your position off right here at target 1. 2/3 of your position off at target 1. In fact, you set and forget. You place the trade, your stop loss is in place, your target 1 is in place. Set your target 2 to 1 to 5 if you like, and leave it alone. That's it. Entry, your stop loss is in place, target 1 is in place. That's it. That's all you have to do. Leave it alone and let it work itself out, pretty much. If target 1 is reached, and then your stop loss gets taken out after you've closed target 1, this is in the money because you've taken 2/3 of your position off the table. So it's a winning trade. If the stop loss gets hit, doesn't matter. Cost of doing business, right? Now, this is a really important part of the process. So we're looking for red breakout signals only. Here's another one. Short position. See the range? Comes back into the range. Sell. Stop loss. Let's just go target 1 to 1. That'll do. Just slightly under. Slightly under. Here again, see the signal. See the range where it broke out? Come across. There's your entry. Stop loss above the cloud. You know, you only need a 50% win rate, 40% win rate, less than that to be profitable. Here's the range. You could set pending orders. Set and forget. Leave it alone. That's it. Walk away. Because target 2 is automatic. It closes 2/3 of your position and you've got 1/3 of your position in running. And I mean, you can come back to it sometime during the day if you want to. And pull your stop loss down and trail it. But, you know, really it's so easy to trade this. Okay, this is the range. You never really got to pull back into it. Maybe if you caught that. Another breakout, sell. See what I'm getting at? Every red signal we take, I mean, you can even go for these dots. Now let's have a look and see what's going on here. All right, so that's still valid. You'll take that. Sometimes these work out, sometimes they don't. Okay, so there's one that got taken out. That doesn't matter. It's still valid. We're still under the cloud, so we can take these. Here's the next one. Pull back into the range. And then after this point here, it trades up. Okay, so this is going to be our last. There really is no... The cloud's too tight here. You don't want a stop loss like that. So, you know, use a bit of common sense. Your target was reached here in any case. And remember, the dollar value is the same. You know, whether it's just a few pips or... it's this one over here. The dollar value remains the same. All right, so in this run here, I think we had one losing trade, was it? I don't know. What have we got? 8 trades, maybe 7 out of 8. Right, you see what I'm doing here? This is where it gets interesting. What I'm getting at here is, all right, this one here closed. It's still in the money. You may have trailed it with your stop loss, I don't know. But if you leave your stop loss alone, and let these go. This one, this one, this one, this one. Wow. See where it's trending back now into the cloud here. You've got these trades still running. 1/3 of your position still open. 1, 2, 3, 4. Okay, so you see where I'm going with this. So while it's trending, let them run. And when you see it trade back into the cloud, well, you can come back and close all of these trades. Another way to look at this is grab a trend line and follow it down, and well, where you see it trading back into this trend line, come back and then close these trades. 1/3 of your position still running, and that's a nice payday. On top of capitalizing on 2/3 of your position being closed at T1 along the way. So, I mean, that more or less wraps it up, guys. I would like to invite you to jump on board, gain access to the indicators, join our Discord group, head over to the website, tradingwithanthony.com. I've said this in previous videos. Shout me a hamburger and chips once a month, and you have access to incredible value. Lock it in now before this changes. So with that, I hope you have a great day, safe trading, and we'll see you in the next video.